All right, great to have you with us here on Financial Lifeline Radio. I'm Dave Harbison. John March here as well. A lot going on today. We'll keep you posted on market data. We'll also keep you posted on what is happening in Washington, D.C., where the Barack Obama administration and the strongly Democratic-controlled Congress are doing their best to spend all the money that we don't have. We'll continue to discuss that, and joining us now to do exactly that, as well as talk about the market for the precious metals and what's going on with investing and the economy. Bob Chapman, author and analyst from the internationalforecaster.com. He's been on the show before. We appreciate the return visit. Bob, thanks very much for joining us once again. How are you, sir?
Well, you're welcome, and I'm fine, and happy to be back.
Let's start with the policies of the new administration, and in particular this spending package, $819 billion, plus about $350 billion or so in interest, since we don't have the money to begin with. I can guess, but I'll ask anyway, where do you line up on this thing?
It's not going to solve the problem. It's a short-term palliative that might last anywhere from 3 to 6 months. It's not going into areas that will produce permanent jobs. Most of it's temporary in nature. Yes, some of the objects of the money do need funds, but like the states, which should have put their house together on their own previously, instead of getting bailed out by the federal government. And, education does need help. There's a very small amount being allocated to infrastructure, which surprises most people. But, in these are Keynesian solutions, and they don't work. These are the same type of solutions that we had back in the 1930s. The administration of Roosevelt and Hoover increased the outlays by 45% between 1932 and 1940. And in 1939, unemployment was 17.2%, down from approximately 30%. And unemployment in 1940 was 16.4%. So these kind of programs, although short-term, they make people feel better, they don't make the problem go away, and in the end, they make it worse. As you pointed out, the $350 billion in interest, and it'll have to be paid on money that doesn't exist.
I was interested, Bob, looking at your last newsletter, and by the way, for anyone wanting to get a complete look at the economy worldwide, the International Forecaster is just amazing. And in it, you said something rather prophetic, because so many people are unwilling to make statements like this. You say, we may see a downdraft in gold on Wednesday to the 890 level or so, but it will bounce, but buy coins and shares because the market will spring right back up. And sure enough, today, what did we have? We had the market spring right back up and be up a significant chunk today. I think the last time I looked, it was up around $19 an ounce or so. And your newsletter is amazing.
Well, there's one thing there also, and the reason why I was able to do that, and that is that I knew that the commercials on the COMEX, because option expiry was on Wednesday, yesterday, that they would take the price of gold down so that the majority of the long options at 900 and 890 would expire worthless. They do it every month. It's criminal. It's manipulative. And our CFTC, our government, stands by and allows it to happen every single month. And I said gold would be up $10 to $15 today, and there it is. It's even higher. And we're off and running. Gold's going considerably higher, and all you people who are sitting on the fence out there, you should be buying today. Should have been buying yesterday, would have been better. But this is long-term.
Yeah, I've mentioned to John a couple of times, Bob, that as we've talked to people on this show and just out on the street as we do research for our program, that even hardcore stock market guys are starting to take notice of precious metals and at least dabble in it at the very minimum. They're at least taking notice, whereas previously up until this point, they had zero interest in or motivation to even look at the precious metals.
Well, we called a recession 2 years ago. 2 days from now. And we got everybody out who happened to be in the stock market, whether in retirement or otherwise, at 14,000. And incidentally, we got them out the second week in April of 2,000 as well. And we've been long gold and silver-related assets since June of 2000.
All right, and we'll continue the discussion in just a moment. Bob, we're up against the break. Let me have you hold that thought. Okay. We'll continue the discussion. Want to get your thoughts on where all this money is going to come from, too, that the government is trying to spend. We have to borrow it. Where are we going to get it? That and more when we return in a moment on Financial Lifeline Radio. Good to have you back with us on Financial Lifeline Radio. Dave Harbison and John March, along with our guest Bob Chapman, author and analyst. The website is theinternationalforecaster.com if you're looking for more information. Mr. Chapman was a stockbroker starting in 1960, retired in 1988, but obviously still has his pulse very much on what's going on in the economy and investing. And right before the break, Bob, we were talking about how you and your group had forecast a lot of the things that have now come to pass regarding the stock market, and there is, and with good reason now, an inherent distrust of the stock market to this point, and certainly I would anticipate that trend continues going forward.
Reason, and that is the people in the stock market. This week, I have declared that we've begun the depression. The first year to 3 years of this depression will be hyperinflation, and then finally it'll succumb to deflation. But that's a ways down the road. And, of course, gold and silver go up with inflation, and gold holds its value or goes up during deflation. So it's the go-to investment. There's absolutely no question. And we finished phase 1 of 3 or 4 phases. So we got a long way to go on the upside.
Yeah, you mentioned briefly the manipulation in COMEX, et cetera, and certainly our friends at GATA are trying to stop all this manipulation. They're trying to stop the manipulation by central banks and by the government and by everyone that's trying to manipulate it. And what's your thoughts of GATA?
They're absolutely correct. They've been correct from the beginning. I know Bill Murphy very well. Known him for
great guy.
I don't know, dozen years, and nobody in Washington cares, nor in Wall Street. It's like a conspiracy of silence, and sooner or later, people are going to discover once control is lost in the system by the Working Group on Financial Markets, plunge protection team, if you will. And when that happens, the entire economy will be breaking down. I think that this could go 2 ways. I might interject here that during that period, interest rates will go up and bonds will go down. And I see the stock market at around 4,000 on the Dow, which is about half of what it is right now. So the losses in the market in total for the last year and a half and 2 to 3 years forward will total something in the order of some 75% probably. And incidentally, that runs true with the correction that was made during the 1930s, 60% to 90% loss in value. The only thing that went up was gold.
You mentioned also in your newsletter, you talk a little bit about that people should read The Creature from Jekyll Island, and our friend Mr. Griffith, he's been on the show many times, but what were your thoughts there? Why were you suggesting that certain people should read that?
Read what?
The Creature from Jekyll Island.
Oh, I didn't hear that. Because it is one of the modern books that capsulizes the real base of the problem. The Federal Reserve, privately owned. And what's going on now is not really nationalization with the banks. It's conglomeration. It's still going to be controlled by the Federal Reserve, which is private. So it's a total privatization and consolidation of banks here in the United States. And the same will happen in Canada and in Europe and in other places, and that is in preparation for what I see as a simultaneous devaluation and default of currencies and debt down the road, which will be married into what these people who are doing this think a world currency. And I don't think it's all going to happen, but I do think things are going to get dreadful. And I believe that half the countries in the world, not just the United States, are going to have revolutions.
Yeah, well, it always seems dire when predicting things like this. However, people have to be prepared, and some people think that paper, for instance, paper gold is good. I worry about paper gold, and I worry about COMEX, and I know you do too, because they're trading a whole lot more than what they have.